Is it safe to treat T-bills like a savings account? I'm brand new to learning about investing. I have a bunch of money in my Bank of America savings account that makes pretty much no interest. I just opened a Merrill Edge account because I can easily link it, keep my preferred rewards. My thought is to buy like 1-2 months T-bills, just keep cycling like that so I can always have access to the money if needed, but might as well make some interest on it. I understand that it is extremely unlikely that the government would not be able to pay. I don't really know much about any of this, so any advice would help. Thanks. Edit. I would like to thank everyone for all the helpful information. This has definitely got me off to a good start, and I've got plenty to study up on. I appreciate all of you. Thank you. What I personally do is keep like $2,000 in my checking account. Then I have a HYSA with $5 10K in it. Then the rest of my money cycles through 4-week T-bills in and out of my HYSA on a ladder. I can cancel reinvestments at any time and have access to more money if needed. That's what I do. I keep the majority right now in USFR. Not exactly T-bill, but a T-bill ETF. First potential error is using B of A for anything. VUSCs is a good option. Vanguard Treasury Money Market Fund with a 5.24 yield after fees. Can sell and have funds within 1-2 days. Buy NYSESGOV for more liquidity than actual bonds. Yes, this is very safe. What people also do is buy a range of maturity dates to start, and then you always have something reaching maturity each month. You then can reinvest that if you want. This strategy is called a ladder. Can also consider putting the money once it's with Merrill in a money market fund, most of which are yielding at least 5, while offering daily liquidity. Unless you need your money to be completely liquid, T-bills are a great 99.999 safe investment. I created a 26-week T-bill ladder, so every month 1/6 is available to me. I can easily float any emergency with my credit card for at least 30 days. So even if 1/6 won't cover an emergency, I've got 30 additional days to figure it out. If something really urgent and expensive comes up, I can always sell stocks and other assets. It is as safe but not as accessible. You are looking for SGOV ETF. What is the appeal in buying actual short-term T-bills versus a fund like SGOV, which I treat as both a savings account and dry powder? I mean, if you're laddering, you may get another fractional point, but it hardly seems worth it. In Merrill, you want FISXX as your HYSA, 5 and some change as a interest rate. In finance, we use treasury rates as the risk-free rate. In other words, they're pretty safe. It's just if you buy then outright, you gotta hold them until they mature or sell them on the secondary market if you need the money beforehand. The principal can fluctuate unlike a savings account. I think what you want is HYSA, not T-bills. One can buy T-bills with maturities as short as a week through a Schwab account and no commission fees. I do that regularly with money I park until I'm looking for the next stock. Annualized about 5.2. Simple and easy. Yeah, you're describing a T-bill ladder and it's valid. Definitely don't set it on autopilot though. You want to always be shopping for good rates. Maybe you can get short-term CDs or HYSA with better rates. Just depends on the environment. Personally, I'm doing a little T-bill ladder in my Roth because A, no taxes, and B, it's emergency savings, and if I don't ever end up needing it, and can buff up my savings over time. It's a way to squeeze in extra years of Roth contributions I otherwise wouldn't have been able to. T-bill interest for short term has leveled off. High interest fund like SWVXX is anytime. Need overnight to get cash. The sweet spot for T-note is about 1 year. It may not serve you unless you want to own one matures each month, etc. We've been doing the 6-month T-bills. Right now about 5.5 annually. Cycling through $5,000, $10,000 a week. Market is up right now, so we are starting to decrease our equity exposure. Doing more credit call spreads. And more ATM covered calls. Using proceeds to buy more T-bills. The world is in a state of turmoil right now which could rattle the markets, and a big sell-off could happen anytime. So, T-bills it is. But 6 months not worth it for the shorter duration for us. No, because of liquidity issues. I think you mean direct registration of your $GME shares. I like investing saving with ground floor 11 APY on secured notes and LROs backed by residential real estate. Just mentioning another relatively new ETF for reference, TBIL. The ETF essentially sells and rebuys the latest 3-month Treasury bills for you. Expense ratio is 0.15 and it's currently paying 5.32 interest. You can easily find HYSA with 4.5 rates. To me it's just easier parking my emergency fund in that. Hold T-bills and, against them, write options on SPX etc. make big moolah. Yes. As long as you have a checking account. Then yes. Merrill Edge effectively functions like a savings account. If all in T, you can only access it during bond trading hours. If you trust the government, then T-bills are generally considered a safe investment since they're backed by the US government. Best to you. I moved from banks to T-bills via money markets mutual funds because I think the last thing to fail is the US Treasuries. Just my opinion. Oh, and don't anyone talk about FDIC. That stupid insurance program cannot come close to covering deposits. The government will be backstopping all that, and then you're right back at square one. Trusting the full faith and credit of the US government. But thing is, they'll let banks fail before the treasuries. China no longer thinks so. Not anymore, lol. Short answer, no. Because eventually the yield curve will flip again and it won't be as high of interest. Personally, I use Robinhood as my bank. Not necessarily recommending it, but they have really great interest on cash and it's very close to T-bill rates. And it's great to have monthly dividends that add to that cash balance. It's not as liquid as a savings account, but it's close. Yes, but I would use T-bill MMFs as a savings account instead of individual T-bills because liquidity. Definitely yes. T-bills rate today are 5 and are 100 more liquid than a savings account. As long as you have enough cash to float the 1-2 months in the event that you lose your job and or have an unexpected large expense. I'd recommend 2 months and enough for a large expense. Jeep it in a HYSA with 4 interest and you're honestly not even losing that much compared to T-bills. This is actually the safest way to store money. If the government can't pay, it would be near impossible for your financial institution to be able to pay. Technically, the only things safer than the US governor are Microsoft bonds or Johnson & Johnson bonds. The risk is low. But the downside is the liquidity is limited, and if you need to sell early on the secondary market, you might lose like 0.1, 0.2 due to the bid-ask spread. T-bills are just fine, yes. But also you should consider high-yield savings. They're yielding for Marcus, Ally, Synchrony, a bunch of others too.